Good morning, good afternoon for those of you that are in different time zones. We're going to kick off here in a minute. We're just going to allow folks to log in. The presentation and the opening slides should be up on your screen once you are logged into the Zoom meeting. We'll be back in just a moment to kick off. Hello and welcome to today's session of Ask the Experts. Today we will cover another ASC 842 leases topic. We will focus on processes and controls, highlight a couple of areas that you may encounter as you work through 842 and your adoption of the new lease standard. We'll cover a couple of things initially here, some housekeeping items, some of the topics we'll cover in future Ask the Experts, as well as the availability of recordings of prior sessions. So first, let me allow me to introduce my colleague, Mark Cox. Mark is a managing director with Riveron and handles a variety of client projects throughout the firm, including ASC 842 adoption projects, system implementations around the new lease standard, as well as a host of other projects, including IPO readiness and 606 projects. So the FASB has been generous in issuing new standards, so we've had our hands full, and look forward to sharing a bit about what we've learned over the last few years. My name is Michael Cahill. I'm also a managing director with Riveron, handling a number of lease projects. I think I'm into my fourth year of working on lease-related projects and helping companies look at, assess, and adopt the new standard. So from a housekeeping perspective, there will be 4 polling questions, and you need to respond to the polling questions to receive your CPE certificate. CPE certificates will be issued in approximately 1 week. If you don't hear anything, please reach out through the registration portal, and we'll follow up and figure out how to get you your CPE certificate. There are replays available. This session will be available for replay. However, there is no CPE offered on the replays. The last sessions that we've had, we've been doing this for a couple months now, and we've covered practical expedience, lease accounting data, aggregating, abstracting the data, embedded leases, and then the accounting day 2 entries in the close process. So those are available for your review, and if you have a specific topic that you'd like to brush up on, those are also available in the registration portal. And then finally, we'll cover some non-lease topics in the near future. Over the next couple of months, we'll hit on some of the hidden benefits of ASC 842 on July 11th. On July 25th, we'll cover the new credit law standard, CECL, ASC 326. August 15th, trends in energy, where we'll focus on some of the happenings in the oil and gas industry. And then after Labor Day in September 5th, we'll have a session around ASC 606 and some of the day 2 ramifications of that standard. So with that, I think we're ready to go, Mark.
Yeah, thank you, Michael. One thing to note on housekeeping is our polling questions will come through pop-ups, and you will have to answer those on the pop-ups. So if you have pop-up blockers on, please turn those off so that you'll be able to have access to the polling questions. And that leads right into our first polling question. How do you expect the implementation of ASC 842 to affect your current processes and controls? For those that have already implemented, that answer could be onto how it might have already affected your controls. So let me get the poll going here for you. So we'll give it about a minute here for people to respond. Okay, thank you for those that responded. You can see, and this is not too far out of what we would expect, that most companies, this is a majority, 57%, are saying some changes will be made, but they will not be significant. Those that have significant changes for D, which is actually a large percentage, 26, typically have a larger portfolio or a very decentralized portfolio, which we will touch on some of those items as part of this process. So just getting a feel for understanding, the context of who we're speaking with here. So we'll move throughout the presentation. So when we're thinking about implementation, one of the ways to look at it, and one of the ways your auditors will look at it, is focusing on the risks during implementation. A lot of participants on this webcast have likely already been through implementation, so you've thought through some of these risks. And for public companies, the risk profile is very important. For the private companies, well, you may not have an internal control SOX program to follow. These risks are still advantageous for you to follow. So taking a look at some of the items that you see here, the main one being around completeness and accuracy, that top risk, lease contracts are not properly identified. How are you making sure you capture the entirety of your lease portfolio? And that's not just your lease contracts, that's also contracts that could include embedded leases. That's the number one risk we've heard. That's the number one focus from auditors is completeness and accuracy. So that risk is key, and that's why we've listed it first. So other risks to think about here are incorrect classification. Now they're all on balance sheet, but that classification is still important because you have a different P&L profile. The lease data that you're using in your calculation of your transition adjustment doesn't agree with the lease contract. So this is more of an abstraction risk that you may have captured all of your leases, but the data that you abstracted may not necessarily be in line with what's in the contracts. So this is making sure you're viewing your leases in conjunction with the requirements of ASC 842. Another one that comes up, and this is specifically those who may separate their lease and non-lease components, which we've discussed in previous webinars. Non-lease components are not adequately identified and calculated. You may have a fixed common area maintenance, or you may have a variable. How are you making sure within your lease abstraction process that you're capturing those? Another very important piece of it is your incorrect calculation of the lease liability and the right of use asset. This is just the pure math behind it. All right. Are your models that you're using, is the system that you're using calculating properly? How have you validated that? Inputs and assumptions used in the calculation of the transition adjustment are not reasonable. Two items that particularly come to mind that are very relevant are the incremental borrowing rate and your reasonably certain holding period. How have you looked at your IBR? Is it reasonable for both your geography and your type of company and the related risk? And for the reasonably certain holding period, are you looking at your leases and the proper data when assessing that period? And another one, just on top of it, for those that have the income tax effects, the income tax effects of the implementation are not properly evaluated at adoption. So these are not all encompassing risks. These are just risks that Riveron has seen based on our knowledge and expertise in the space. Mainly, we'll talk a lot about the completeness and accuracy, that top risk, but this is just giving you a flair for how am I even starting this process for those that haven't been through it yet.
So I think, Mark, just one point to highlight on the incorrect calculation. I think the context of our conversation, a lot of the lease projects we've done, both you and I, the teams we've worked with, has been around implementing a system as well as handling the technical accounting. But you know, no matter what system you have, there's got to be a process of assessing the output. So with any system, whether it be an ERP, you know, some type of financial reporting, bolt-on system, or a lease accounting system, validating that accounting output is one of the key aspects of implementation. So we've built up models that do that independently. We've got good normalized lease data, and we run that through a model to, like I said, independently, like our auditors are going to do. They're going to do some independent calculations. We're doing it on a broader population to make sure that whatever system we've implemented or whatever approach we've taken to accounting for our leased assets and liabilities are correct and accurate.
Yep, and that's a good point, Michael. And we'll touch on some of the items that you would look for in a lease accounting system by looking at their service organization control reports, you know, and what controls are covered as part of that report, and have you evaluated those properly. So moving through, the overall question here is, what controls do you have in place to ensure you have addressed the risk that you've identified? You know, we mentioned some risks, not all encompassing. There are many more to think about. But there's some key questions to think about, and you know, some of these have already been mentioned. How are you determining the completeness and accuracy of your portfolio? What are you currently doing to track your leases, and who has the authority to execute leases? What we've seen in practice is that the authority to execute leases can be throughout an organization. Sometimes it can be business unit leaders. Sometimes it can be plant managers, depending on maybe it's an equipment lease. When you don't have a centralized method for tracking and the authority to execute leases is not centralized, then you could have issues in capturing your lease data. And a lot of that comes around the training and education of your team members that you're working with. Another thing to think about is which practical expedients and policy elections have you elected or will you elect, and do you understand the impact of those elections? I think we've seen in practice that almost everyone's taking the package of practical expedients, but one of the things that's come up as part of that is you retain your ASC 840 classification, but what if your ASC 840 classification was incorrect? Do you understand what the impact of that might be? Have you captured all of your deferred rent under ASC 840, which has been an issue with several clients that we've came upon? So you have to understand what that means if you elect those practical expedients as part of the process. Another thing to think about is what type of payments do your leases have? Fixed increases, variable, non-lease components, combination of all of these. We've seen CPI index increases, we've seen set percentage increases over time, and then we've seen fixed rates. These all come into the standard, obviously, as part of the calculation of the payments. So thinking about what your leases are currently made up as in terms of payments and how those might play into your implementation process are things to think about. You may have a much smaller liability if a large portion of your lease payments are variable, but you can't really know that until you've gotten all the lease data in one place. We touched a little bit on non-lease components, but this is important, and this is part of the practical expediency and the policy election is, do you plan on combining your lease and non-lease components? Obviously, that could increase your liability, but also what are the implications if you don't and you elect to break those apart? Then that can create a different process as part of, and additional risks as part of your process. And so thinking about how you're going to capture non-lease components and building those into the abstraction process to make sure you're covering that risk. And Michael touched on this, and Riveron has done this quite a bit in helping companies implement standalone lease accounting softwares and thinking about what you're going to use to calculate both your transition adjustment and your day 2 compliance with ASC 842. Do you plan on using a lease accounting system? Some ERPs have an ability to do it. You could do it manually, or you could have a combination of these. And this is a very important step to think about when evaluating the risks and how you might address those. And this next piece is one that has come up quite a bit, particularly at companies that maybe don't have the most robust in terms of team members. You might be running very lean. And so do you have the individuals in your organization that have the time and the adequate knowledge of both the business and the standard involved in the process? And this is where it can be very helpful to have a third party be able to help you with this project, whether it's a project manager or someone who you can bounce technical accounting questions off of so you can understand what the practical expedient and policy elections. But one of the key things to think about is the individuals involved in this process should have a knowledge of both the business and the standard. It's helpful to have experts in the standard, but the business team must be involved in order for this to be successful. And also thinking about your renewal process. We touched a little bit on reasonably certain holding period and addressing that risk. How do you typically renew leases beyond their initial term? How are you going to evaluate that period as part of your ongoing compliance with ASC 842? And I think the last one, which we also touched on as part of the inputs and assumptions, is how are you going to determine your incremental borrowing rate? There is a practical expedient for private companies to use a risk-free rate, but understanding what that means. A lot of our companies have been working with their treasury groups to understand risk profile and what incremental borrowing rate means. But we've seen several different methodologies and approaches here, and I think the number one thing is making sure you are evaluating your alternatives. Have you looked at different ways of doing this, and have you ran a sensitivity to cover the risk to make sure it's appropriate? And the last bullet, to cover your risks, keep your documentation. Document throughout the process. Keep contemporaneous documentation as part of your implementation process. It will give comfort to both you, management, as well as your auditors that you have evaluated the standard in a thoughtful, practical way.
And I think on that point, there's two things just to mention. One is that the duration of these projects, I think, has lasted longer than anyone has anticipated. So each one that we've done, everyone has been surprised by the level of depth and the duration that the project takes. And again, it depends on your portfolio, how many leases, what types of leases, how decentralized your organization is. But the longer the duration, if you're not documenting that as you go through, it's going to be hard to recapture all that information at the end. So one, do it as you go along. And then there's just a lot more decision points than most people consider. So hopefully this web series has been helpful in highlighting some of those things, but yeah, document early and often.
Yep, absolutely. Thanks, Michael.
And we're going to a polling question next. I think we got a comment or a question in terms of not seeing the polling question pop up. So folks, just a reminder, block or allow the pop-ups on your machine. Otherwise, it may not pop up.
That is correct. If you do not remove the pop-up blockers, you will not be able to see it. And that gives us a good segue into our second polling question. So we'll launch polling here and give everyone about a minute or so. Okay, thank you, everyone. We'll share the results here and see, and not unexpected results here. The combination of both, which is something we mentioned earlier and what we've seen be most successful, is a combination of both internal and external team members, so third-party experts. And we've played this role for several clients where we're a project manager from an external standpoint and knowledge of the standard, and then there's an internal leader who is driving from the business perspective, who has knowledge of leases within the business and can drive the process. So this has been most effective, and it's good to see that the large portion of the team members, our large portion of the webinar attendees are seeing the same thing. So this is what we've seen so far. So it's as expected. So we'll continue to move forward here. So we talked around some of the risks and some of the questions to ask. Based on Riveron's expertise, we want to jump into some of the best practices we've seen. Again, not all encompassing. These are just pieces that are helpful to think about going through this process. And as many have been through this process, they also have some hindsight and can understand some of the practices about how they may have changed it or what they may have done that worked really well. So we'll talk through some of those items here on this slide. One of the main pieces that we've seen that has been very successful is forming a cross-functional team. And this is across your organization, really regardless of size, making sure team members are involved throughout different aspects of the business. Accounting, obviously, finance, tax, legal, operations, procurement, IT, and with a single project manager or a combination of project managers, internal, external. This has been one of the biggest success points we've seen when you have knowledge throughout the organization, throughout the business as part of this team. And what it typically looks like is you have a weekly meeting with your cross-functional team. They're not maybe involved day to day, but they're understanding what they need to do to be compliant with ASC 842. And also, when you need decisions from your legal team or your operations group as to how to change a process, that can be helpful to have that group all together. So designating an individual throughout the organizations in these various aspects will be very helpful. One that we've seen, developing a certification or a survey process for individuals throughout the organization. So we talked about the cross-functional team, but one of the risks we talked about is how are you going to capture all your lease data and ensure that you do have all of the leases that have entered into as part or executed within your organization? Then that you could do that through a survey process. You have to start with an education process. Sending a survey out without warning the team members and giving them an understanding of what you're asking for will not be as helpful. But developing a process as to how you can capture both your leases and other service contracts that could contain embedded leases. This will also be a day 2 item we will discuss, but you'll need to do this as part of your implementation, and we've seen it have success. Another piece of it is involve your external auditors as early as possible. If you can get your auditors involved as part of the process, once you have a good handle around how you plan to attack it and maybe sharing that plan with them, is very helpful. They can chime in as to what they may be doing, what they'll look to from an audit perspective. Getting them involved early will be helpful. And that's for public or private companies. Even if you're going through it middle of the year as a private company and maybe they're not fully engaged, bounce some questions off of them, jump on the phone with them and let them know what your plan is. If you're going to use a lease accounting system, ensure that IT, accounting, and your internal control teams are involved in the configuration and testing. One of the things that has been very unsuccessful is trying to configure or test in a vacuum. If you have certain roles and access, if you're going to have an application program interface with other systems in your organization, you haven't looked at that from an internal control perspective, make sure your team is involved in the configuration of that system, not just accounting. Obviously, accounting will be driving a lot of the entries that go into it, but making sure the organization understands the impact of that system. Another thing to think about on a system, which we mentioned earlier, is getting a hold of the SOC reports early on in the process. Not relying on a system that doesn't have the controls in place themselves from a service organization to be able to cover the standard. I think things that we have seen is, companies have gone through the demo process and maybe understood what the system could do, but they didn't understand the controls in place at that provider. And come to find out, you get your SOC report and their calculation has failed as part of their testing. So their calculation of 842, which is the whole point of using the system, maybe has failed. How do you have complementary controls to cover that? To Michael's point earlier, that just means a lot more accounting validation. So getting in front of that process, if you haven't gotten a system yet and you're thinking about using one, ask for that report during your sales process when you're asking for the demos. Think about your future state during your implementation. If you think your organization is coming, I have a new ERP coming, I'm going to make several acquisitions in the next year, think about building flexibility into the process. This is not, yes, the implementation is important, but we will have to think about the day two, which we will touch on a little later in the webinar. We'll have to think about that as part of the implementation as well to make sure we're not having a rigid process that can't be changed. Another item that has been very helpful is preparing a single implementation memo that covers your process. This is capturing your documentation, policy and practical expedient elections. Also, what alternatives you looked at. Did you look at all the alternatives when making those selections? Why are they appropriate for your company? Your methodology for developing your incremental borrowing rate. And, the big one is reasoning for why these all make sense for your company. Having this in a single place instead of one for policy and practical expedience and one for IBR, this gives kind of a single point for your auditors or even management to understand what you did as part of this process. And one thing that we've really seen, and this has been becoming more and more relevant, is specifically for those who have large leasing portfolios, is use the implementation as a way to identify and implement changes around the lease process. You're already making changes from an accounting perspective. How can we identify efficiencies in this process? And we've even seen several of our teams, specifically our supply chain team, has identified cost savings because you might identify during the process that you have numerous leases with the same counterparty, but they're not being entered into as part of a single agreement. So there could be some cost savings built into that if you manage it centrally using a procurement team or a VP finance, higher level individual. So you can use these implementations as a way to build efficiencies and for cost savings. It's not just an accounting standards change. This can be a positive impact throughout your organization. And the last piece on here is, how are you training your organization to be aware of ASC 842 and what is required of them? A lot of times accounting standards, that's an accounting thing. So thinking about what other aspects of the business will be changed and who needs to be aware of that. And a lot of that goes with your cross-functional team. When you have a cross-functional team as part of this process, those individuals can be evangelists for ASC 842 in their various departments. And so having them involved early, they can educate their teams as to what may be coming for legal, operations, procurement, and IT. And again, these are not all encompassing. These are just some really good points that we've seen as during our process of 40 plus implementations that we've done across just systems, but not just systems. You can do this manually and still need to build in a lot of these best practices around your implementation. So I think as we think about the next steps, a lot of people on the phone call have already been through this implementation. So what's next? What about day 2? So we'll touch on that now as we talk about your post-adoption processes. We started with risks on implementation, so we'll start the same way with post-adoption. What are some of the key risks to address as part of after the implementation of ASC 842? So your post-adoption. Now you've gotten your Q1 entries in if you're a public company, getting into Q2. Now what do I need to do after the fact to change my process and address some of these risks? The main one, which goes back to completeness and accuracy, is lease modifications and terminations are not properly captured. We will touch quite a bit on this. Reassessment of lease inputs and assumptions are not evaluated in a timely manner. How often are you going to look at your IBR? How often are you going to look at your reasonably certain holding period? There are various ways to build that into it, but a reassessment is a necessary part of the process. For some of our private companies, that's annually. Reassessing annually, but for public companies, that could be a different interval. But I think you also have to build in what if there are triggers that cause me to reassess in an interim period outside of the end of a period. That's a key risk to think about. Lease journal entries are not properly reviewed and approved. And one thing to think about here is you might have a lease accounting and ASC 842 team within your organization. And they may have gone through this big implementation process, but then someone is recording and reviewing these journal entries that were not involved in the process, and they don't have the requisite knowledge. One of the things always in the internal control world is what does the precision of review look like, and are the right people reviewing these journal entries? So thinking about how you're going to build that process out. Reconciliation of your lease liability, your right of use assets, and related accounts are not being prepared. I think the expectation is you would have some sort of a roll forward with your assets and your lease liability, and making sure you're capturing that. And also, what is your AP reconciliation for lease payments going to look like? That's some of the related accounts that will come out of it. And then, of course, your disclosures. They're not provided in accordance with ASC 842, which have expanded disclosures. So just, again, not all encompassing, but some of the key risks to think about. And you can see, again, completeness and accuracy is the first item we're touching on here, that your modifications and determinations are not properly captured. If you have a fast-moving lease portfolio that's changing continuously, that's a much more significant day 2 lift for those type of companies rather than those that are reassessing leases on an annual basis. So keeping in mind what that might look like for your modification and termination process.
And I think kind of that last topic with the disclosures, that comes late in the game when you're doing the financial reporting. But if you're using a lease system or otherwise, there's likely leases that you're going to scope out of that system for one reason or another. They're material, or you're going to have short-term leases that you're not going to put in the system. So that disclosure needs to be complete. So you're going to have to, even leveraging a lease system that has a reporting function, you're probably going to have to pull things from your GL and elsewhere. So it's not going to be just boom, hit print, and that disclosure is going to come out. And I think there's plenty of public companies now that disclose their Q1, so there's lots of examples. But just take a look at the disclosures out there. They're pretty robust, and gathering all that data can be a lift and an exercise in and of itself. So don't wait until the last minute to look at the disclosure requirements.
Absolutely. Make sure you're capturing that data from day 1. So again, you're talking about the post-adoption process and some of your controls that you might think about. What are the considerations, and how am I going to monitor my compliance after I've implemented? I've done this big process to implement. the last thing I want is the compliance with ASC 842 to fall to the wayside. So how can I maintain that level of buy-in from the company? Some of the questions we've already mentioned is, how often does or will my lease portfolio change? Previously, you may have had massive changes in your portfolio because you were going through a transformation and you're going through a procurement exercise, but going forward, you don't expect that to change. That's a factor. Now, going forward, you may make numerous acquisitions. How are you going to capture those as they come into your portfolio when you make that acquisition? How do you capture your new leases executed and lease terminations, lease modifications, or lease reassessments? So we talked about, how does the portfolio change? Now, how are you going to capture that data as it comes in? How are you going to capture it in a timely manner, specifically? How do you plan on monitoring or reviewing other non-lease agreements for embedded leases in a timely manner? So, some types of agreements to think about are service contracts, IT contracts where there could be the right to use an asset embedded in another service contract. How are you going to monitor and review those for embedded leases, which we talked about a lot in our previous Ask the Experts webinar? If you're going to use a system, we talked about this, is have you evaluated the system, the service organization's control exceptions, and how do your complementary controls match up to that? Do you need to build new controls into your process to mitigate that risk? And best practice is to ask for that early in the process. And that may be that they did not have, the lease accounting system did not have control exceptions in the first year, but how do you plan on monitoring that control report going forward? There could be changes in their system environment and new exceptions could come up. If you plan on being acquisitive, how are you going to integrate those leases from the acquired entity into your process? It could be a company that has not been through ASC 842 that you plan on acquiring in a period of time, and they've got to be compliant when they come onto the book. So how are you evaluating the integration into your 842 process? Could be multiple ERPs, could be putting them into your lease accounting system. But if you are an acquisitive company and it's something that you've done frequently in your history, this would be something that would be helpful to think about. How often are you going to reassess your inputs and assumptions for changes? We talked about IBR and a reasonably certain holding period. There are other inputs and assumptions that are helpful to think about, but how often do you plan on reassessing those? How will you capture the information required for disclosures, which Michael touched on earlier, is thinking about what a disclosure looks like and making sure that data is built into the process from day one. A lot of our clients have decided not to put short-term leases into their system, but you are still required to disclose short-term leases. How are you going to capture that data for your disclosures? And another one is, how are you going to capture variable lease consideration that maybe is not being recorded within your lease accounting system? It wasn't in your day one liability, so how are you going to capture it in day two for disclosure purposes? So moving on to our next polling question, and this is one thing we've touched on, is how have you designated an individual or group within your organization as your lease accounting leader after adoption? So we'll launch and we'll give everybody about a minute here. A few more seconds here. So I'm going to show the results now. As expected, yes, almost half of the viewers on the webinar, saying yes, they have designated a leader for after adoption. I think one of the best practices we will talk about is designating an individual and having that individual involved in the implementation process so they're already hitting the ground running. Some companies don't necessarily have that person identified yet, and they may plan on hiring that person after the fact, and they go through the implementation and then bring that individual on. That is something we've seen as well. So, but not too far unexpected. If you know, those that have answered not sure yet, I think something to think about there is just it is a best practice to have an individual who's managing this process for you. So moving through, and again, the very top best practice is what we just mentioned as part of the polling question, is having a lease leader within your organization to manage the accounting and reporting to leases. I think this is a very important piece of it. This would be your subject matter expert within your organization. This person would also be able to help educate your organization as to what changes they need to make in their processes, and always being able to monitor that compliance piece of it. Develop a triggering event checklist or a set of procedures to determine when leases may require reassessment. Part of ASC 842, you're required to reassess leases at certain points. How are you going to do that? What we've seen in best practice is develop a triggering event checklist, and that checklist is filled out, you know, I would say typically on a monthly basis. A lot of times you're not going to have any triggering events, so it's just part of your control environment to make sure you're not missing anything. Review the inputs and assumptions made on a periodic basis to ensure the data is relevant. Relevant data is being considered. One item is incremental borrowing rate. Have your risks of your company changed throughout the process? Have you decided that you are going to now renew a lease and something's changed, and that reasonably certain holding period needs to change? That could be part of that reassessment process, but reviewing those assumptions made on a periodic basis, I would think at a minimum quarterly would be a best practice that we have seen companies put into their control environment. And we touched on this as a little bit part of the implementation best practices, but building a certification process for the individuals throughout the organizations to identify new leases, terminations, modifications, or new material contracts for evaluation on a periodic basis. If you have a large lease portfolio, I think something like this, something like monthly would be helpful. Quarterly as well, but some private companies may go with annual, especially if you have a smaller portfolio that's not necessarily material. You could make an argument for annual, but I would say shorter intervals are better to make sure you're not missing anything that could have a material impact on your financial statements. If you are using a lease accounting system, ensure that the service organization control reports are being evaluated for user control considerations. Don't rely without understanding the controls. We've talked about this several times. For those with the larger portfolios that are using a system, this is a key part of your control environment, and could also vastly impact your day two controls and processes, because if that system cannot be relied on for calculation or various purposes, then you would have to build an accounting validation process on the back end. If your monthly calculations are automated through a system or ERP, it is a best practice to perform a sample of standalone calculations. This is even if their calculation controls are working at the service organization. Performing a sample of standalone calculations of your leases outside of the system to ensure compliance with ASC 842 is a best practice. We've seen companies do that. Michael and I have both had clients where we've helped them do that as part of their Q1 process. Is they've used the system, gone through the process, but this is the first quarter in doing this. You got to get some comfort around it, and also how are you getting your auditors comfortable that this is in compliance with ASC 842? So we've been able to build accurate models that match up with 842, and to be able to do that accounting validation.
Yep. And I think if you look back at some of the replays, the May 9th session on sort of the day one, day two, and financial close related to 842 covers some of these topics from a pretty practical perspective. So it might be worth going back and replaying that if this is a topic that hits home.
Yeah, absolutely. Thanks, Michael. Another one that we've seen, and this is a little bit over and beyond, but it is a best practice for those. A lot of people do this during implementation. We think that it would also be good to do this during your post-adoption, is reviewing your AP transactions to determine if there are consistent monthly payments to vendors that might need to be evaluated from a lease accounting treatment. A lot of companies have kind of isolated those lease accounting payments into maybe an AP clearing or some similar account. We talked a lot about that in that May 9th session as to what that could look like, but performing a review of your AP transactions on a monthly basis to see if you have some consistent payments going to vendors that are not in your lease portfolio. Is that a lease, and do I need to take a look at it? That could give additional comfort around completeness and accuracy, that you're evaluating all the alternatives. We touched on this as part of the implementation, but continued education. If you're hiring new individuals that maybe don't have understanding of ASC 842, or you have some of those significant changes around ASC 842, the continued education and monitoring of this process is absolutely important and should be a control aspect as part of your overall control environment around knowledge and understanding of people and processes. That ASC 842 should be top of mind for everyone that has leases, and how do we keep that top of mind for your whole organization, not just your lease leader. And another thing that is helpful is how often are you going to look at your process to ensure you're both compliant and efficient? There may be new changes in technology out there. You may decide that I'm going to do this manual for 1 year, and then I think I need to put this in a lease accounting system. Don't just set that day one implementation, think in the future. We talked about that during the implementation, but how are you thinking about how can I make this more efficient? How can I get some cost savings? That is something, don't just set it and then forget about it and move on to the next thing. Look at this process on a periodic basis to see if changes could be made. And we have, Michael and I have both had clients that have decided to go the manual route, and very likely they could get to a system over the next 1 to 2 years, because that brings efficiency into the process, and that cost benefit of assessing that system could be could change over time as they start to go through these processes.
Yeah, I think to that point, there's a heavy emphasis as the public companies went through this to get compliant with 842 from an accounting perspective, to get the reporting done. But there's also, the systems have a lot of asset management functionality. So workflow controls that we're talking about today, reporting, just the way that we manage our leased assets should be different now, because there's such a focus on it and we've got such good visibility. So I think leveraging those systems to their full capabilities is one thing. And then, integrating that into other systems, whether it be, your AP, your ERP, or, an upstream system where you've got a real estate asset management system, so that the data is flowing right into your lease asset accounting system. But there's going to be a lot of depth, I think, as we get into sort of the day two considerations.
Yeah, I absolutely agree with you, Michael. I think when you're going through an accounting change, a lot of times accounting is a back-end process, and we're finding out about, as accountants, we usually find out about things after the fact. This is an area where accounting is front and center. We're making an accounting standards change. Use that to your advantage in this process. Where can I make changes throughout the organization to make us more efficient and to make us compliant with ASC 842? So use it as an opportunity to do more than just 842, but also enhance some processes. And we've seen that be very successful in some of our clients that have used the automation route, whether it's through an ERP or a system, and they've been able to make the compliance much smoother than it would have been if they went a manual route. So last polling question here. After implementation, how often do you plan on reevaluating your processes and controls to ensure you're complying with the standard and also identifying efficiencies? Just again, talking about what we were able to mention earlier is, how often are we going to do this? I think a lot of private companies are going to be annual. I think at a minimum quarterly. If you have a very large portfolio, it might be monthly. You might need to look at your process monthly. If you're 1,000+ leases and there's fast moving pace, you might have to relook at your processes much faster basis. But I think quarterly, annually is what we would expect most people to do, and a lot of people have not gone through this process yet, so they're just not quite sure. So we'll give another 30, 45 seconds here to answer the question. Okay, going to share the results here. Not too unexpected. We've got mostly quarterly, about a third annually, and then some people are, one individual is actually going to do it monthly, which is great. And then some people are just not sure yet, which I think those going through an implementation, you're just not quite sure until you have all the information in front of you. So like as we continue here, we'll quickly summarize some of the items we've touched today. Again, not all encompassing, just based on our expertise, but if you're a lessee or lessor, a lot of the information we talked about today is from a lessee perspective. There were changes for a lessor perspective. ASC 842 absolutely has an impact. So if there's people within your organization saying ASC 842 doesn't have an impact on us, it's just a gross up, that is not the appropriate way to look at it. There will be a change. So you will have an impact on your processes, whether it's small to minimal or significant, as individuals mentioned earlier. As we mentioned multiple times, implementation can and should be used as an opportunity to reevaluate your current processes and ensure all of your risks are addressed, and possibly redesign those processes to gain efficiencies and save costs. Post-implementation processes should provide the ability to capture your changes to the lease portfolio, again, completeness and accuracy, and also capture the required data for disclosure purposes. Whether you do it manually or you do it with lease accounting system or through your ERP or a combination of all of them, work backwards from that disclosure and make sure you have completeness and accuracy of both your disclosure data and your data for all of your leases. And throughout this process, we've mentioned, Riveron can provide insights based on our experience with implementation and compliance across industries and company size, whether it's lease accounting softwares, manual calculations, or just helping you think through what the policy elections and practical expedience may look like. So definitely reach out if there are questions. I think handing it back over to Michael, who will cover some of our future Ask the Experts.
Yeah, and one other thing, I think on that last polling question in terms of periodic review of your portfolio, then when you think about private equity-backed companies and, or maybe lender-focused covenants, and as you get into 2020, you've got monthly reporting obligations, and this could have a significant change to your balance sheet. So whether it's, tripping a covenant or just something that's going to surprise the PE firm sponsor when you submit those January 2020 financials, I think just as you go through 2019, just have the conversation, have that as a topic in conversation that, they may not be aware of it. Certainly leases is not the most frequently brought up topic, I think, with PE firms or their companies, but just something to be aware of. We work with a lot of PE companies. So, yeah, like Mark said, the series will continue. We'll do this a couple times a month. We'll probably take it a little bit lighter as we get into summer vacation schedules, but upcoming sessions will cover some of the hidden benefits from 842, some supply chain considerations now that we've got great information on our leased asset vendors, the new credit standards, CECL, also in July, and then in August and September, trends in energy, oil and gas overview, and an ASC 606 day 2. So we're also asking for feedback on topics. So when you're submitting your feedback on today's session, if there are future topics, I know we've got some on cash flow hedging, PP&E, and blockchain, cryptocurrency intersecting with accounting. So love to receive those ideas and areas that companies are looking at or wrestling with that we can share what we've seen and learned. So thanks for attending. Again, there's contact information on there if you need anything or have any questions, but enjoy the rest of your day and good luck with your 842 adoption.
Thank you.